First quarter advanced GDP and employment cost index data hitting the wires as we speak. Steve Weissman is back at the table. Rick Santelli's in Chicago at the CME, and he's got the numbers.
Yes, first quarter, our first look at GDP expected to be down a couple of tenths. And what we end up with is down 0.3%. Down 0.3%. We haven't had a negative number since minus 1%. That was in the first quarter of 22. That's what we're comping to. On consumption, better than expected. 1.8%. Better than the 1.2, 1.3 we were looking for, but less than half of the 4% in the rearview mirror. And 1.8 would be the lightest going back to the second quarter of 23. If we look at the pricing index, it's on the warm side, 3.7%. That's about 0.5% higher than expected, and 2.3 in the rearview mirror. 3.7 equals the last quarter of 22. You have to go to the previous quarter, the third quarter of 22, to find a higher number. And in terms of the core pricing index, it is 3.5%, about 0.4 higher than expected, and that is 0.9 higher than 2.6 in the rearview mirror, and that comps to the second quarter of 23 as well. You see interest rates moving up a little bit. My guess is those are the numbers it's looking at. Employment cost index, a first quarter number, expected up 0.9. It arrives at 0.9, and in the rearview mirror, well, 0.9 was the last number of the last quarter of 24, so we're equaling, haven't had any changes there. We've moved up a couple of basis points. We're at 4.14 in a 10-year. We're now at 4.18, and do remember that today, if we close lower in yield, and right now we're basically right on the border of unchanged, it would be down 7 sessions in a row. If the 2-year note closes lower on the day, it would be the 5th lower close in a row. And all of that may be due to some negative news like less jobs. July 24 is the last time ADP was down at 62,000. But the equity markets certainly seem to find some solace in lower rates. Back to you.